What is going on, guys? Money Mander back here for the Kane Capital YouTube for our little couch series going on here with a special guest today.
What's up, guys? How are we doing?
All right, so without further ado, let's get into this. I like SPX, Snipes like SPY here. So we're going to talk about the differences fundamentally between the two and then why we like trading each particular one. So take it away. Why do you like trading SPY?
So many reasons. The first reason is because I can scale out much easier with SPY. With SPY contracts being much cheaper, I can get many more of them for the same price. I would only be able to get one or two SPX contracts. This allows me to exit multiple times throughout my trade, and I'm able to scale out sometimes even 4 to 5 times and still remain inside of the trade while I'm de-risking as we are gaining money.
Yeah, that makes a lot of sense. Obviously, the difference between the two in premiums is because SPY trades at a 1/10 cost base of SPX. So obviously the premiums are going to be about a 1/10 the size. So if you're looking at something at the money that's not a 0DTE, like you're probably used to paying like $2 a contract on SPY, that'd be $20 or $2,000 per contract on SPX. So it definitely is a big difference there. The reason I like trading SPX in particular, especially for 0 days like we trade, is that it's cash settling. And so really, as I've kind of migrated my trading this year to get away from the 0 days, the only time I'm ever taking them is on a strong trend day, whether that's the upside or downside. If I'm able to catch a strong trend day where my contracts can get in the money, then I don't have to worry about liquidity and like selling them right at 359 at the bell, which is like always it like scares you, right? You're trying to find a buyer, especially as you get deeper in the money and liquidity dries up. Whereas SPX, you can just hold them right into the bell, and however much you're in the money from your strike, you just get that in cash. So if I close the contract 50 points in the money, I'll just wake up to $5,000 cash in my account per contract. They really trade similarly, especially if you're going out of the money and, volatility wise, but that's my favorite thing with SPX.
Yeah, I do like that also. SPY is very volatile as well. I do agree with what you're saying about holding them into close and how it automatically settles. That's an amazing perk on SPX. However, for my personal trading style, I'm not really holding anything that late in the day. I could sell some contracts around 10 a.m. and then I could hold on to them. 10:30 comes, I'm up another 25%, I could scale out a couple more. I don't know, 11:30 comes around and I'm up 75%, 80%. I'm still in the trade and I still got many more contracts. So I could still secure some of this profit while we can continue to go. So every time things look a little indecisive, we're de-risking as we're moving. And that's one of my favorite parts about SPY versus SPX.
I think that's a really good point. And it really just comes down to trading style, I think. For me, especially if I'm playing 0 days, I think everyone knows I like trimming half at 100 and then just letting the runners ride risk-free. So for me, if I'm able to catch a good move on SPX where I'm out half, I'm risk-free, half at 100, and then I just let them ride, that to me, the cash setting is like the biggest thing. But I will say, especially when you're playing deep out of the money, like for me, the money spot I found on SPX is premiums between $1 and $2. So like $100 to $200 per contract is like that money spot for volatility, where if you get in at a good entry, your contract can double within a matter of minutes. That seems to be, to me, versus playing at the money, they might go like 20 to 30 for 50%. For me, that 1 to 2 area is like the money zone for volatility. But at the same time, if I was playing SPY at the monies or one strike out of the money for the same price for like $1.50 versus 40 points out of the money on SPX, like if I get a move against me, I'm going to be down 50%, whereas the SPY 0 days of that same premium price, they might be down 15, 20. So it really comes down to trading style, trading preference. Because obviously, like if I'm playing them, it's going to be 0 or hero. Where it's not like if I wanted to do the same premium on SPY, I'm probably getting at the money, if not just out of the money for that same thing. And my down draw is going to be significantly less.
Very similar to that, I do like to trade at the money. For those of you who don't know, I'm primarily a 0 days till expiration option scalper. One thing is I like to get my options very close to the money, no more than $1 ever on SPY out of the money or in the money. With SPY contracts, I've noticed it's a little bit easier to hold it towards that intrinsic conversion right there versus when I'm buying SPX at the money, we're already looking at contracts that cost over $1,000 a piece normally. It is a bit bold to buy those for $1,000 a piece on a 0 day till expiration, but it is pretty similar, just like to what you're saying, buying 10 versus 1 on SPX versus SPY. I do like that, but the one thing that I do like about SPY primarily more than SPX is just that price action when it comes towards going into the money right there. I do like these intrinsic 0 day contracts. They do move very similar, but overall I've noticed that with risk management, SPY seems to work a little bit better for me.
I think that's a really good point too. And obviously Jay-Z said it best. If you can't afford to buy it twice, don't buy it at all. So being able to get one contract on SPX versus 10 on SPY and you're not able to scale versus being able to scale, I think that's a really big thing. The last thing I wanted to mention was the taxes, because I think this is a really important thing, especially for full-time traders like we are. Anything out of the Chicago board, which SPX is taxed as long-term gains versus anything, if you're trading equity options, which SPY obviously is one, all your profits get taxed as normal income. So it's whatever tax bracket you fall into. Any profits you have on futures on SPX tax on VIX, they get taxed at 15%, like it's a long-term investment, which I think is really beneficial, especially as you look at people making hundreds of thousands of dollars full-time trading. You know, that could be the difference between 25% of income tax there on what you're getting taxed on your profits. That adds up to be a lot of money.